This is Veriscope News. Verified data, clear context. This report covers the latest Weekly Petroleum Status Report released by the U.S. Energy Information Administration. All figures are presented as reported, with no interpretation beyond the data. The Weekly Petroleum Status Report provides a snapshot of U.S. oil supply conditions. It tracks crude oil inventories, refinery activity, imports, and production levels. These figures are used across energy markets, logistics systems, and industrial planning. Inventory levels reflect the balance between supply and demand over short time periods. Changes in inventories can signal shifts in production, transportation, or consumption patterns. This report focuses on U.S. commercial crude oil inventories, excluding the Strategic Petroleum Reserve. The U.S. Energy Information Administration released its Weekly Petroleum Status Report on Wednesday, April 1, 2026 at 10:30 a.m. Eastern Time. The data covers the week ending March 27, 2026. U.S. commercial crude oil inventories were reported at 461.6 million barrels. In the prior week, inventories were reported at 456.2 million barrels. This reflects an increase of 5.4 million barrels based on the rounded table values. The official summary states an increase of 5.5 million barrels. No revised value for the prior week was provided in this release. The reported figures reflect total commercial crude oil stocks held in the United States. These inventories exclude volumes held in the Strategic Petroleum Reserve. Crude oil inventories are a key measure of supply within the U.S. energy system. They represent stored oil that has not yet been refined or consumed. Inventory levels change weekly based on production, imports, refinery inputs, and exports. Over time, inventory levels follow seasonal patterns. During some periods, inventories build as supply exceeds demand. During other periods, inventories decline as demand exceeds supply. A 10-year average is often used as a reference range for typical inventory levels. Inventory levels above this range may indicate higher available supply. Inventory levels below this range may indicate tighter supply conditions. The reported level of 461.6 million barrels reflects current storage conditions across the system. Weekly changes provide short-term signals, while longer trends provide structural context. Crude oil flows through multiple stages, including extraction, transportation, storage, and refining. Inventories serve as a buffer within this system. They allow supply to meet demand even when production or imports fluctuate. The EIA collects inventory data from storage facilities, refiners, and pipeline operators. This data is aggregated into national totals and released on a weekly basis. Households. Crude oil inventories are part of the broader system that affects fuel availability. Households interact with this system primarily through gasoline and diesel prices. When crude oil supply levels change, this can influence downstream fuel production. Fuel supply levels can affect pricing at retail stations. However, crude inventory changes are only one part of the overall pricing structure. Other factors include refining capacity, distribution, and taxes. The reported increase in inventories reflects higher available crude oil within storage. Prices. Crude oil inventories are one of several inputs used to assess supply conditions. An increase in inventories indicates that supply exceeded demand during the reporting period. This does not directly determine prices, but contributes to overall supply assessments. Prices are influenced by multiple variables, including global production, transportation costs, and refining activity. Inventory changes provide a short-term data point within this broader system. The reported increase of approximately 5.5 million barrels reflects a weekly shift in supply balance. Jobs and labor. The oil supply chain includes production, transportation, storage, and refining activities. Inventory levels can reflect operational activity across these sectors. When inventories rise, it may indicate increased production, reduced refinery inputs, or higher imports. These shifts can affect workload across facilities such as pipelines, storage terminals, and refineries. Employment levels are influenced by long-term trends rather than weekly changes. However, inventory data contributes to operational planning within the energy sector. Savings and investment. Energy markets are part of broader financial systems. Crude oil inventory data is used by institutions to track supply conditions. This data supports planning in areas such as infrastructure investment and energy production. Changes in inventory levels provide information about short-term supply trends. Investment decisions typically rely on longer-term data patterns. The reported increase reflects current storage conditions rather than long-term direction. Businesses. Businesses across transportation, logistics, and manufacturing rely on fuel availability. Crude oil inventories are an upstream measure within this supply chain. Higher inventory levels can indicate that more crude oil is available for refining. Refineries convert crude oil into usable products, such as gasoline, diesel, and jet fuel. These products are then distributed through transportation networks. This report suggests that crude supply within storage expanded during the week. This can influence operational planning across supply chains. What experts are watching next? Energy analysts monitor several indicators alongside crude oil inventories. These include refinery utilization rates. They also track crude oil production levels. Import and export volumes are reviewed for changes in trade flows. Refined product inventories, such as gasoline and distillates, are also monitored. Upcoming weekly petroleum status reports will provide updated inventory levels. Monthly reports from the EIA offer additional detail on production and consumption. Other data sources include international supply reports and refinery activity updates. These indicators provide context for interpreting weekly inventory changes. The reported data reflects current supply conditions in the U.S. crude oil system. Inventories increased to 461.6 million barrels for the week ending March 27, 2026. This represents a weekly increase of approximately 5.5 million barrels. This indicates that more crude oil was added to storage than removed during the week. This is one measure of supply balance within the energy system. Crude oil inventories are one part of a larger network that includes production, refining, and distribution. Changes in inventory levels are tracked regularly to monitor system conditions. The reported figures provide a current snapshot of supply within the United States. Crude oil inventory data is collected through standardized reporting systems. Companies report storage levels, production volumes, and transportation flows. The EIA aggregates this data into national totals. Inventory figures are reported in barrels, which is the standard unit for crude oil measurement. 1 barrel equals 42 U.S. gallons. The reported total of 461.6 million barrels represents aggregate storage across multiple facilities. Data is rounded in published tables, which can result in small differences between calculated changes and summary statements. In this case, the table shows a change of 5.4 million barrels, while the summary reports 5.5 million barrels. Such differences are due to rounding conventions. No revised value for the prior week was included in this release. This indicates that previously reported data remains unchanged. The reporting process follows a fixed weekly schedule. Data is collected, verified, and released at the same time each week. This consistency allows for comparison across reporting periods. This has been Veriscope News. Verified data, clear context.